Hello, in this presentation we will compare QuickBooks Online versus QuickBooks Desktop. Hello, in this presentation we will record a sales receipt in QuickBooks Online. Here we are we will have a comprehensive QuickBooks Online course soon, if not available yet. We also have a comprehensive Excel course which complements the QuickBooks courses and a QuickBooks Pro desktop version course you can find at the link below. The QuickBooks Online dashboard, we will be continuing with the Get Great Guitars problem. We will be recording a sales receipt. It's important to note what a sales receipt is in comparison to a related document, that of the invoice. The sales receipt is going to be representing the item that we are selling and payment happening at the same time, whereas the invoice represents the fact that we sold something and we have not yet received payment. Meaning we're selling something, in our case being guitars. We could also think of this as a service company where we would do the service and had not yet gotten paid. That would be an invoice that we would be sending out and expecting to be paid in the future. If we're getting paid at the same point in time, that would be the sales receipt, where we record the form of payment now and the related sales at the same time. So right now we're saying that we are going to be making a sale, in our case a guitar that we're selling. We're getting payment at that point in time. You can imagine us being in the shop. We're actually in the shop and we sold the guitar. Someone brought the guitar up, has the sticker price on the guitar, and it's going to give payment at that point in time. We're going to enter that transaction into the system here. To do that, we'll go up to the plus icon up top where most of our quick kind of transactions will be. We have the customers, vendors, employees, and other. We're looking in this case to the customers section and we want to find the sales receipt. So here is the sales receipt that we will be recording for this particular customer, recording the fact that a guitar is being purchased at the store, payment received at the same point in time. We're going to get this from string music. So that's going to be our customer who we're selling the guitar to at this point. Remember to keep in mind everything that's happening as we report this form. So here's the form. That form means that we're receiving some type of payment, typically going either to the checking account or into, in our case, we're going to put it into that uncategorized fund to be deposited later. The other side of this will be some kind of revenue. So we're going to select the drop down and we're going to look for string music. We don't have one. So we're going to type in string music and we will add string music as a customer. So we're going to add new customer, string music. We're not going to enter the details right now. We just have the name. Details would be this screen showing all the other information here. We're just going to keep the name. That's all we need to keep going. We then have the email address. Email address would be important if we were going to email this information to them, send an email. If we're going to print it, then we don't need it. We're not going to put it here. We have the billing address. Now the billing address and the address for our company are going to be important when we consider things like sales tax. So if we are not charging sales tax, if it's a service company, if we're not subject to sales tax, then the billing address may not be as important and we can move forward. If on the other hand we need to calculate sales tax as we do here on a guitar, it's going to be important to put this amount here, the address here, and then go through and set up the sales tax. The new sales tax, remember, will be set up so that the computer will try to calculate that. And in order to do that, you got to set up the sales tax. We have to say it's taxable for the item that we're selling. And we need some type of addresses so the system can know what the rate will be. So we're going to use this address. It's a California address here. And that should hopefully allow us to have the sales tax. Then we're going to say the date will be 01/16/21. We are working in the future, so January 16th, 2021. We're not going to have anything in the shipping information. The payment method we're going to say is going to be cash, no reference number. And once again, we're not going to put it in the checking account directly because we're kind of imagining we're getting it at the store here, and we're going to go to the bank at the end of the day and deposit not only this check but multiple checks, and therefore within our bank statement it'll be grouped with multiple checks. We want to group it in the same format so that we can then do the bank reconciliation at the end of the month, and therefore we're going to put this first into uncategorized funds and then go and deposit everything that's within the uncategorized funds to the bank, and in so doing group it in the same format within our system as will be seen in the bank. Then we're going to have the product down here, and we're going to sell a guitar. If we select the drop down, we'll have all of our items. Once again, these items are the service items that would be seen when we entered in the items. We had to go in and enter these items. If we had not yet entered an item, we can add one here, or we can select the items that we have. We're going to have a Wildcat, so that's the one we want. It's an Epiphone semi-hollow body guitar. It's going to be a quantity. We have 1. We have the rate at 400. The amount 400 because it's 400 times 1. And then we have the tax. It's going to be taxable. Now, the tax isn't showing up here yet. You have to be off the cell. So if I click off of it or I tab one more time, then it'll go to the next cell and we should see the calculation. So here's the calculation made. Now, because this is just an example problem, and I don't want to make it specific to a state, and I want to just make it somewhat even or a simplified numbers, I'm just going to change this to 5%. So our sales tax is going to be 5%. So if you're working in QuickBooks, you can't change it unless it calculates something, and then you can go in and change it if you want to at this point in time. So it's going to be 400 times 0.05. We're going to use $20. So we're going to use 20. And because this is not a problem based on the calculation of the sales tax, we just want to use a somewhat standard sales tax that and just get the concept of what sales tax will be, and you can apply that to any location. So we have the $20. So there's the 20. If we click off of there, it's going to say, hey, that's not what we calculated. We're going to say, yes, we want to keep the 20, and I'm going to tell QuickBooks that it is an example problem, and therefore they didn't do anything wrong. Their calculation was fine. So there we have that. And if we look at what we have so far, then if we think about what's going to happen, as I always suggest we do, to the financial statements when we record this, we know that the undeposited funds, kind of like the cash that hasn't yet been deposited, will go up by the full amount, the 420. We know that revenue will go up. Some type of sales revenue, merchandise sales revenue, will go up by the sales price, the sticker price on the guitar, which was only $400. The difference will be 20 that we'll have to do something with. That will go into a payable. We don't get to keep that. We are collecting it, not getting to keep it, however. Therefore, it's going to go into something like sales tax payable, which we will then have to pay some point in the future. There's also the inventory going down. We see the inventory item here, but it's not going to be going down by 400. That's what we're selling it for, not the cost of the inventory. It will go down by the cost. The system knows the cost. We're not going to put the cost on the sales receipt because we're giving this document to the customer, and we don't put the cost on the document we give to the customer. And but the system knows it, and this form will drive the inventory going down. And we'll see that as we look at the financial statements. And the other side is going to be the cost of goods sold, which will go up and bring net income down. Effect on the income statement then, increase of 400 revenue, but also an increase in cost of goods sold and expense. We don't know what that amount is. We'll take a look at it on the financials, but the difference would be the increase to net income from this form. So that is going to be this, and we're going to go ahead and save this item. It's also an item we may want to print out oftentimes, so I'm going to go ahead and print this item. So we're going to print, and here it is. I'm going to download it and save it, and it's going to go into our docs. So it's right where we want it to be. So I'm going to call it a date of 01/16/21, and it's going to be for or let's call it sales receipt string music, and we will save that, and there we have that. I'm going to close this out. We'll go back to the reports now and see what happens. So we save this. I'm going to close it, and let's go to the reports. So we're going to go to the reports on the left hand side. Check our main reports, our financial statement reports, which will include the balance sheet. So let's go to the balance sheet. Here it is up top. And we're going to change the dates to the current period we are working on, 01/01/21 to 01/31/21, and then we will run that report. Here is the report. Now we put this into undeposited funds. So here's the undeposited funds account. It is increasing. We're at 20,920. That's money that we assume we have, that we haven't put it into the bank yet. So if we select that item, we're going to see here is our items here. And this one was the 420 right there. So if we select the 420, we can see here it's a sales receipt. If we select that, then we should actually see the sales receipt we created. I'm going to close this back out and go back to the report. The other side's typically going to be on the profit and loss related to that cash going up, that being revenue. So let's go to the profit and loss, check that out. We'll go to the reports, left-hand side. We're going to go to profit and loss report. And we're going to change the dates once again to 01/01/21 to 01/31/21, January 1st, 2021 to January 31st, 2021. That's the period that we are working on. We're going to open up the run reports. And here we have this item. We're going to say the sales then is sales of product income. Selecting that, we should then see that not 420, but the 400 sales receipt. Clicking on that. Why do we have 420 and not the 400? Because we're recording just the sales amount, the sticker price of the guitar in sales, not the $20 sales tax, even though we will be receiving 420. So let's close this back out once again, and we will then go back to the report, back to the report summary. And we're going to check out the other side of this, and that's going to be the $20 that's going to be in the sales tax. That's back on the balance sheet. So we'll go back to the balance sheet, reports on the left side here, reports. We're going to select the balance sheet, and we're going to change the dates once again to 01/01/21 to 01/31/21 and run that report. Once we scroll down, we now are looking for the liability related to that $20. So if we scroll down, we have the liabilities, the California State Board of Equalization. So if you're using California, it'll show that. If you're not in California, you're using something else, it'll have some other body that will be the collecting body of the payments we will be making for sales tax. I'm going to select that item. Here's the information related to the sales receipt. So if we select that, we then will see our sales receipt once again. There's the $20. Going to close this and go back to the report once again, back to the report. Now there's the item that we didn't see was the inventory must be going down. So the inventory is going down. Here's our inventory. It's an asset account. So we're up in the assets. Here's inventory. We select inventory. Then we're going to say what happened to inventory. It went down by 320 from this sales receipt. So if we select that 320, we see no 320 on this form. Why not? How can this form be the cause of that 320 when there's no 320 on this form? And that's because it's being driven by this item. This item, when we enter this item, is going to have the 320 cost, and the sales price is all we're going to have here. So this form is driving the 320 inventory going down, although it's not on the form. Let's find where it is at. We're going to say this is a wildcat, so I'm going to close this out. We're going to go to the sales items up top. We're going to go to the product and services and scroll down and see if we can find that wildcat inventory item. When we entered this inventory item, we said here that it had a cost of $320. That's where it's pulling that 320 from. So now let's go to the reports once again, and let's see the last component on the profit and loss or income statement. Profit and loss is what it's called by QuickBooks. Profit and loss. We'll change the date once again to 01/01/21 to 01/31/21, and we will run that report. So the other side is going to be in the cost of goods sold. So sales went up by the sales price, which I believe was the 400, and then the cost of goods sold is going to go up. The expense related us to consuming the inventory in order to help generate revenue. If we select that item, we see the 420 right here, selecting, or the 320 right here. Selecting that item, then we see the same sales receipt. The same sales receipt here, that number being driven by, once again, this item. So I'm going to close that back out. The effect on net income, I'm going to scroll back up. We're going back to the report summary. And the effect on net income then is an increase of 400 for the sales price, an increase in cost of goods sold of, was it 320? The difference was the net increase in net income on our profit and loss or income statement. Hello, in this presentation we will enter a sales receipt for a service item in QuickBooks Online. We will have a comprehensive QuickBooks Online course soon, if not available yet. We also have a comprehensive Excel course which complements the QuickBooks courses and a QuickBooks Pro desktop version course you can find at the link below. Here we are on the QuickBooks Online dashboard. We will be continuing with the Get Great Guitar problem. We're going to be entering a sales receipt for service items as opposed to inventory items. So for example, we won't be selling guitars, the inventory item, but having a sales receipt for a service item. It's important to note the difference between a sales receipt and an invoice. The invoice is what we're going to use when we do work and we expect to receive payment in the future. In essence, recording an IOU, an accounts receivable from the client. The sales receipt within QuickBooks is going to be the documentation used to record the sale at that point in time. So in this item, we're going to use the sales receipt. You can imagine we're in the guitar store here. Someone came into the guitar store and wants to have the service on their guitar for retuning or diagnose something on the guitar involving service, not selling a guitar. And we're going to do the service and get paid at that same point in time. And that would be the sales receipt. In order to enter the sales receipt, we're going to go up to this item up top, the little plus item. This is our quick window to get to most of the documents in a quick fashion. We're going to be in the customers section, and within the customers section, we want a sales receipt. So here is the sales receipt. I'm going to select that item, and we see a sales receipt, a lot similar to an invoice. Just remember the difference here is that when we see the form sales receipt, it means that we got money and either deposit it into the checking account, but typically we're going to put it into some other account, an account like undeposited funds, and then deposit it at a later time. And then the other side of it will be going to revenue. If we were selling inventory, we would also have a decrease in inventory and cost of goods sold. If we don't have inventory, such as a service item, as we're doing now, then we don't have to worry about that second piece. It's a more simplified process. So we're going to pick the customer first of all. So if we select the drop down, here is our list of customers. If we start typing in the customers, it will autofill. We're going to say we're on Sam, the guitar man. And this is a new customer, so Sam, the guitar man, is not there yet. So we're going to add Sam, and it didn't add. We're going to say Sam, the guitar man. Then we're going to tab through here. So we're going to say the email address. We don't have one at this point. If you have the email address, it's useful if you want to save and send by email. If you're just going to print it out and give it at that point in time or save it as a PDF, then the email is not as necessary. We're then going to tab through here and we get to the billing address. The billing address will be important if we have sales tax. Now in this case it's a service item, so we're not going to have any sales tax and therefore the billing address would not be as important. But just keep in mind as you work with this, if you're selling something that has sales tax, QuickBooks Online will do this automatically now. And in order to do that, it needs the address of the store. So when you set up the company, make sure to have your address in there. And it needs the billing address in order to calculate the sales tax, or at least where the sale is going to take place, and as well as setting up the agency or the location by agency as well that the sales tax will be required. So I'm going to add an address here, even though we don't really need one for service items. It's not going to be as big a deal for the service items. We're then going to go over here and have the date as of 01/16/21. We will be working in the future here. Tabbing through the shipping, we don't have any shipping. The payment method we're going to say is cash. So we're going to say cash and the reference number, and then make sure this is undeposited funds. Undeposited funds. So it's going to go into undeposited funds when we get the payment, when we get the cash. That means we have it. You can think of it in the store, in the register. Then we're going to deposit it into the bank at the end of the day. Then we're going to have the product or service. These are still going to be items here. So just like inventory items, we've already listed the items out. We have input the items. If you want to see how to do that, take a look at the prior presentation. And if they're already in there, then we could just use those. If they're not, we could enter items here as we go as well. We can add the items in this screen, or we can add all items in a prior screen, and then they should be set up. It's great to have them set up because once they are set up, then anybody can run this system. They can basically, as you can say, hey, run the register or run the QuickBooks system, record these, and it should be a simple data input process at that point. So we're going to have a diagnostic. So we're going to say the drop-down diagnostic. I'm not sure exactly what that is in terms of guitars, possibly a diagnostic on the amplifier or something, I don't know. But we have one of those that we sold, that we have a service item for that. And we have one, rate 68 and 68. No tax is going to be applicable because this is going to be a service item. And then the next item we're going to say is a guitar tune-up. Guitar full tune-up. Well, let's see the drop-down. We'll see the drop-down, see if we have the guitar. Actually, we labeled it our service. So there it is. And that's going to be the description, guitar tune-up. Now, where did this description be different than the our service? How did that happen? Because that's in the description when we set up the inventory item. It's just pulling that information in. So that's going to be quantity 1, rate 140. So there's the 140 there. Tapping through that. That's all we have. So this is going to be our 2 service items. We're imagining someone in the store getting a diagnostic and an hour service on their guitar equipment, and that's going to cost $208. There's no sales tax because this is a service item. If there were sales tax for any particular reason, we'd have to select that tax item here, let it calculate there, and that's going to give us the total then of the 208. So let's just recall what this form is going to do, and then we'll go see that it does what we think it's going to do. We know that it's a sales receipt. That means we got a payment. We didn't put it in the checking account, so we're going to put that in the undeposited fund. So an asset account, undeposited fund account will be increasing. The other side is going to be the fact that we earned the revenue through the service we did, diagnostic and hour service, and therefore the other side will be some type of revenue account on the income or profit and loss statement that will increase as well. So let's print this out, and then we're going to go and check out the financial statements. So we'll go to print or preview, and we will print or preview this documentation. Then we're going to download this information and save this to the place where we want to put it on our desktop. Date's going to be 01/16/21. And it's going to be a sales receipt for Sam the Guitar Man. Hopefully I spelled that okay. That's okay. We're going to save that. And it has been saved, and we can do whatever we need to do with that. And we're going to go ahead and close this now. I'm going to X out of it up top with the X. And let's go to our reports and see what happened to the reports from this document, from this sales receipt. We're going to go to reports, left-hand side. Drop-down menu. We're then going to go to our balance sheet. We're going to type in the balance sheet, select the balance sheet, change the dates to the dates we are in, 01/01/21 to 01/31/21, January 1st, 2021 to January 31st, 2021. We'll run that report and see what happens. So we're going to scroll down. We got cash, remember, and we put it into these undeposited funds. So we have a lot of undeposited funds right now. We really need to go to the bank, but that represents funds that we have not yet gone to the bank with. They're basically in the store. So we're going to click on that, and here is our items here, and there's the Sam the Guitar Man payment or sales receipt item. If we click on that, we will see the sales receipt, hopefully, that we have just input. There it is. So there's the one side of the transaction we just did. I'm going to close that out. We're going to see the other half, the other side of the transaction we just did. Scrolling back up, we're going to see the back to report. We're going to go back to the report. And the other side should be revenue. So that's going to be not on the balance sheet, but on the income statement. So let's go to reports on the left-hand side, selecting reports. Going to type in the income statement, or profit and loss as it's often called or is called on QuickBooks. There's the income statement. We'll change the range from 010121 to 013121, and we will run that report. So we're running the report for January 1st, 2021, the year we're working in, to January 31st, 2021, the year we are working in. We have a revenue account. Note we have two revenue accounts here. This is going to be the inventory we sell, which QuickBooks is calling sales of product income. And this is going to be for the service items, the items that don't have inventory related to the revenue we make. We, of course, will be choosing this second one, the 208. We'll see the items here, and we have the 140. We're going to select the 140. And here is the data that we have just entered for that information for the 208. So we've got the two items here. So if we close this back out, note that this is one sales receipt with two items in it. If we close this back out, we see the detail is actually breaking it out by item. So it's the same sales receipt number 1007 with these two items in the detail for this transaction report. This is kind of like the general ledger, by the way, showing the detail of the account, the history of the account. We're going to go back to the profit and loss. Now, if this was something like inventory we sold, then we would also have cost of goods sold here. No cost of goods sold this time because we did service, not inventory. Therefore, that 208 is the increase we have, the only increase we have that will increase net income. Hello, in this presentation, we will record the creation of a sales receipt. Sales receipt meaning the documentation that will be generated and prepared when we sell goods, in this case the guitar, and receive payment at the same point in time. This sales receipt documentation being compared and contrasted to an invoice, which is something that we would record when we sell the good, in this case the guitar, and expect to receive payment in the future. Something that often is used more in like a service type of business. In this type of transaction, we would expect payment basically at the same point in time of delivery. Oftentimes, when that is the case, the document used that we will record in QuickBooks will be the sales receipt. If you have been following along with us, we will be continuing on the Get Great Guitars. If you haven't been following along and just want to see the creation of a sales receipt, that is what we will do here. If you have access to the backup at this point in time and want to be working exactly where we are at here, then you can go ahead and file and restore that backup up here, getting us to the same point in time. We will be working with entering data, and therefore we will need the prior data, the future data, and hopefully we will end up at the same point at the end of the project. If an error has been made in the past, however, note that if you restore one of the backups to that point in time, then you can work forward from there and we can all be on the same page. So what we're going to create here is going to be a create sales receipt. Now note we have the home tab open here clearly, and the home tab is open here. If you don't have the home tab open, you're going to go to company and home tab. Also, we always recommend having the open windows open here so that you can see what is open, in this case, just the home tab. We are going to be working here with the creation of the sales receipt. So we're going to have the sales receipt document that typically is going to be compared and contrasted to the invoice. And QuickBooks provides a nice visual here on the home page that will give us a clue, an idea of what that differentiation is. And you'll note that the invoice is over here. And then we're going to have a receipt payment. And then we're going to deposit it into the bank, meaning an invoice will typically happen. Often you can think of a service type business, someone doing bookkeeping or a law firm that does the work, has to bill the client, has to count how many hours they worked on and then record how much they have earned and then bill the client for that amount. In that type of environment, the bill is going to go out, then we're going to receive payment in the mail, then we're going to take that payment to the bank and record it. Note here we're saying that we got paid at the same point in time. So when we take a look at the create sales receipt, that's similar to what you can think of as the register. If we're just sitting there at the register and someone brought in our case, we sell guitars. So someone brought the guitar, says, here's the money, and we're going to record it into our register. That's more what the sales receipt is going to record. It's bypassing the creation of the invoice, and we're getting the payment right at this point in time. So we're just going to get the payment, and then we're going to record it as a deposit after it has been received. So the difference here clearly being that we are receiving payment at the same point in time, as opposed to an invoice where we are doing the work and expect to receive payment, you can imagine, in the mail at a future point in time. So this will save us a step in that it's just going to record the payment at the same point in time. If we were to get paid at the same point in time and we accidentally created an invoice, that's okay. We would just have to do 2 steps. We'd have to create the invoice and then receive the payment for that invoice. To eliminate those 2 steps, if we get paid at the same point in time that we do the work, then we can just go directly to the create sales receipt, as we will do here, clicking on create sales receipt. So our example, we're going to have a new customer that we're going to get a sales receipt. It's going to be string music, and therefore we're going to put this information up top. I'm going to go ahead and collapse this added information. I'm going to collapse this window. We don't need the added information. And then we're going to put the customer here. So we have a customer. We can imagine string music, someone representing string music came into the store and just bought some guitar. And we're going to put the information related to that within this here. Now, we could select the drop down. We say, this person is a new customer. We don't have their information yet. We will take that down. In order to do that, we could go to new, but I like to just type it in there. I think it's easier to just type in. We're going to say, well, what's the name? And we're going to say string music. And then once we select a tab, it will prompt us to set up the customer. Now, obviously in real life, if it was a customer, especially if it was a music shop, then we would probably want to do the full setup, get as much information as possible. In this case, we're going to do the quick setup, however. That's all you need really to set up the sales receipt. And that's what we want to concentrate on. We want to concentrate on just what's happening when we set up the sales receipt. So we're going to go to the quick add, and we're going to have the template. We're going to use the template. Again, we could customize these templates a lot. We're going to use the default, which is sufficient. It looks nice to use the default, but we could put our logo on it. And if we have time later, we'll go through some of that customization options. But here we're getting to just the logistics of it. How does this thing work? So we're going to go to cash. We're going to say we got a cash payment. We're going to tab through this. The date is going to be the 16th of the 2021. This entire project being worked in 2021. To get from 12 to 16, I'm going to do that by just hitting the plus to 13, 14, 15, 16. That's a useful tool to have and use. So I recommend getting used to using the keyboard as much as possible, saving time. Tabbing through to the next item, the sales number. It's going to start at 1. It's going to count upward. Might as well keep the numbering that is generated from QuickBooks. Then we have sold to. All we have is the name. We would like to have the billing address. Again, if we were to set up the entire customer information, we would. But the name is the minimum that we need. Then we have the check number. We have cash here, so we're not going to deal with the check number. Again, the check number is informational, so it's not required. If we were to write the check, we would almost have to have a check number. But if we're receiving the check, it's a good thing to have. Any more information is a good thing to have. It's not a required field, however. Then we're going to select tab, and we're going to sell an Epiphone semi-hollow body. So that happens to be number WIL. And of course, this would hopefully be on the sticker of the guitar here, and we would put that information in. We'd say, if I select tab, that costs $400, and we can just collect the payment of that $400 at that point in time. I'm going to make these cells a bit wider. Now, you might be asking, if we've looked at this in the past, it's the same as the invoice. Where did the system get this information? We want to have this information set up before, so that when we ring up the guitar, we don't have to think about, well, what's the sales price? What's the cost? How much is it? Obviously, it should be on the sticker of the guitar, so we could just type it in there if we had not already entered it into the system. But it would be much better to have it already entered into the system, so the system can ring this up, and we can then match it to the sticker that is hopefully on the guitar, and that'll give us a bit of more of a check. How did we do that? Remember, you have to go to the lists up top. You got to go to the item list, and we set up these items. So here's the items that we set up. We're looking at the Epiphone semi-hollow body, so that's going to be this item here. If we drill down on that and edit, if I go to the item tab and we edit item, we can see what we did here. Note what we see on the sales receipt is $400. That's the sales price. What we do not see, however, is the $320. And that's the beauty of QuickBooks. Will cover that. It will record not just the sales price, but the cost as we go in a perpetual system rather than a periodic inventory system. And that's going to be great for us to track the inventory in terms of our sales, the sales that we have made. So we're going to go ahead and close this out. And I'm going to go back to the open windows over here. Well, we can close this out. I'm going to close that out. And then we're going to go back to the open window. We got the 400, and then we've got the sales of 400. We have sales tax of 5% sales tax. We just made that number up. It's going to be different from state to state. Again, you would have to choose that in the lists, items, the item list, in order to get the correct sales tax for your state. So you're collecting that. But again, the beauty is QuickBooks will take that, calculate it, and put it into a liability, which all we have to do then is write a check to whoever we owe that liability to in whatever time period it's required to be made at that time. So here we have that, and we are going to received the 420. Now, if you want to print this, you can go to the print here, and if you want to mail it, obviously we can email it with these options up top. I'm going to go ahead and save and close this, and we can take a look at what it's going to do. Save and close. And if you have something in your inventory that is not a normal word, you could add the word, and I'm not even sure if that was spelled, but we're gonna keep those. And then we're gonna go back up to the reports and see what happened here. So we're gonna go to the reports, and we're gonna open up our two main reports. That being the profit and loss. But let's start with the balance sheet. Let's start with the balance sheet down here. So here is the balance sheet. We're going to change the date to 12/31/21. I'm also going to change the range so that when we drill down on it, we'll have a range. So I'm going to change and customize the range to 01/01/21, 12/31/21, and OK. Now let's think through what's going to happen here. We made a sale and we got money. So you would think right off, you would think that we would get cash of the 420 that was deposited because we got cash. And if I double click on it, note we don't see the cash for 420 in our major checking account. And so I'm going to close that out. Reason being is that it's basically in our cash register, it's in our drawer, it's in our hand, it's not in the bank. And so QuickBooks, once again, is going to put it into this other account called undeposited funds. And so if we double click on that, we see that 420 here. So at a later point in time, we're going to have to take all these deposits we have, go to the bank with it, and deposit it. And as we do that, it'll group them all into the correct grouping, the same grouping that will then be reported on the bank statement, that making it much easier for us to match our grouping to the bank statements when we do the bank reconciliation. So that's the first thing. We need to be mindful of that and keep that in mind. Don't mix up that step, because that's an easy step to mix up. So we have that, and then the other side of it is going to be the sales. We've got the sales side of it. So I'm going to go to the reports. We're going to go to company and financial, because the sales side of it's on the income statement, or the profit and loss, that's called, which it is called by QuickBooks. So profit and loss standard. Dates are going to be 01/01/21. We are working in the future, 12/31/21. And we got the sales. So we have our sales, merchandise sales. I'm going to double click on the merchandise sales. And there we have that. And there's our 400 there. Note what is not there, the 20. We collected 420, but the 20 we received wasn't sales. That went to who we owe. That went to a liability because it went to sales tax. We owe the state that 420. So we got 420. I mean, we owe the state 20. We got 420. We got revenue of 400. Where's that other 20? Should be on the balance sheet somewhere. It should be something that we owe to the state. Let's take a look at that. I'm going to close this back out. Back to the balance sheet. We're going to go to the balance sheet up top. We're looking through the liabilities. We're trying to see, is there something we owe to the state? And we have sales tax payable. Sales tax payable, $59.50. If we double click on that, drilling down, zooming in, we see there's that 20. And there's from the prior sales as well that we looked at those two invoices. I don't think we considered these in prior lecture, but we have the 20 there. And that means that we owe, of the sales we made, this is a liability we owe to the state, this $59.50 whenever we have to pay that, given the rate of sales tax that we had to then collect. Note once again that QuickBooks, once this is set up, just records this journal entry, and we don't really need to know what's going on, but it's nice to be able to have an idea of which accounts are being affected when we generate these forms. So I'm going to close that out, and you would think we'd be done there, but there is another side to this, of course, because we gave up the guitar, and the guitar is an asset, and it went down, so we decreased our inventory. So we've got the inventory up top here, inventory asset. Let's see what happened to that account. If we double click on it, drilling down, zooming in, we see that it went down by 320. It went down by 320. And of course, that's the cost. That's the cost that we saw on our lists, not the sales price that we sold it for 400 and we got 420 because of sales tax, but we sold it for 320. So if we double click on that, we'll get back to our sales receipt. There's our sales receipt. We sold it for 400, collected another 20. We don't see the 320, but QuickBooks clearly recording the 320, closing this, right here, related to the cost that being gotten through when we set the inventory item up in the lists, in the inventory lists. So I'm going to close that out. And one more item to look at, and that's going to be the cost of goods sold. Where's the other side of that transaction? The other side related to the inventory, that's going to be in the profit and loss. So in the open windows, we'll go to the profit and loss. Their cost of goods sold should contain that amount. Double clicking on the cost of goods sold, zooming in on it, there's that 320. If we double click on that, here's our same sales receipt. Closing that out, closing this out, we see then that cost of goods sold increased, sales increased by 400, cost of goods sold by I think it was 320. So the difference then is what net income is being affected by. So we're going to do this again. We're going to say there's another sales to a new customer, Sam the guitar man. Okay, so we're going to record another sales receipt. So I'm going to go back to the Home tab. And once again, we're going to sales receipts, meaning we sold a guitar, we got paid at the same point in time. And so we're going to go to sales receipt. And we have a new customer. So once again, we don't see Sam in here. So Sam just came into our shop and bought a guitar, and we're like, okay, so we're going to set up Sam the guitar man, and we're going to say tab. And once again, we would probably want all the detail, but we're just going to add the quick add to see what happens here in our setup. We're going to say that we got cash and tab. The date is going to be 16th again. Invoice, or the sales number, is going to be repeated. It's going to be the same. And we're going to have the sold to here, check number. I'm just tabbing through this, and then we're going to have the item. So in this one we had a diagnostic. So we did work on a guitar here. So now this is part of our service here rather than our inventory. And so we did it. And so once again, we could select the drop down, which has all the items, not just the inventory items, but also our services. So we have a diagnostic here, which we're going to put there. And there's our diagnostic, which was 68. We should be putting the quantity 1. If we don't have the quantity, obviously it will default to 1. And then we have another service provided here, our service and guitar full service. Okay, and that's going to be 1, and that's at 140. So these are going to be service items rather than selling the guitar. Note, we may or may not have sales tax that's going to be applicable Oftentimes, the sales tax is not applicable to service items, but only to inventory items, depending on the state. So if we go to this customer code, we're going to change it from taxable sales to non-taxable sales item. And that should remove the amount calculated for tax. Therefore, we're remaining with just the 68 and the 140, giving us the 208 in this case. When we record this, we can think through this transaction again, what is going to happen. Note that there's no inventory item here. So this is going to be more of a simple transaction because there's not a decrease in the inventory and we're not dealing with the sales tax information here. We just have a service item that was sold. No actual guitar, in our case, no inventory, and therefore we're going to have an increase or debit to some type of cash account. However, not going to our main checking account, but once again going to the undeposited funds. And then we're going to have a credit to some type of revenue or an increase in some type of revenue account. Let's see if that's the case. We're going to say save and close. And I'm going to say yes. And then we're going to go to our two reports, starting with the balance sheet, which is still open in our open items window. And we want to say it's not going to be in the checking account, even though we got cash. The cash went into undeposited funds. If we double click the undeposited funds, we see that amount there, the 208. Double clicking on that, we see that our sales receipt shows the 208, given these two services that were done. We're going to close this out. And close that out. Remember that we have to then go to the bank and then deposit that. If we just spend the 208 in cash, that's not very good practice. Typically, we want to put it in the bank being a double check of our records. So so typically we want to make sure that we go to the bank and deposit any cash receipts. If not, again, we're going to have to basically adjust this undeposited accounts in some way to account for that transaction. So if there's a bunch of money in here that we do not have on hand that we're going to deposit in short order, then there's something wrong there and we need to kind of fix that. Note once again that we will understand this problem, be able to at least locate the problem when we do bank reconciliations. The checking account, we should be able to tie down pretty well when we reconcile the bank accounts. Very important to reconcile the bank accounts. It really will help, and that'll give us an idea of whether we're doing all this stuff correctly, and so that's going to be a big component. Then the second half of this, we're going to say should be some type of revenue. That's going to be on the profit and loss or income statement. So we'll go over here to the profit and loss or income statement. Notice we put it into not the same sales item. We now have another sales item that we had set up in a prior presentation. And I think it was set up automatically by the system because we chose a merchandising and service company. But notice that if you set up a merchandising company, it may not set up another account for services, and you might have to set that up when you record a service item. In order to do that, you would go to lists, you would go to items, and you go to lists, you go to chart of accounts, and then you could set up your income account down here, one for a service item. You could a service account. It's an income statement account. You could also do it with the item list, meaning if I go to the item list over here and I was to set up an inventory item as the ones we did here, these are all service inventory items. During that setup process, we're going to have to choose the income account it goes to, and we could at that point in time set up that service inventory account at that point in time. Back to the profit and loss. There's our item. If we double click on that, here it is here. If we double click on either of these coming from the same sales receipt, there it is. We're going to practice printing this out. You could email this, you could print it. We're going to print it as a PDF using a Qt PDF printer. If you do not have a Qt PDF printer or any kind of PDF printer, then you could download it. It's a free download. It's really useful, not just in this program, but a lot of different programs, because some programs don't let you print, but they don't let you save as a PDF. But they do let you print, and therefore if you have a PDF printer, you can print it as a PDF and basically save it as a PDF. Could be quite useful, so we're going to do that. We're going to say print, and it's going to our PDF rather than another printer here. And we are going to say OK and keep the settings there, print it. And this is going to be a sales invoice. It takes a little bit of time sometimes, and sometimes when we use this Qt PDF printer, we have to like minimize the window, and then it pops up. And then we're going to go and find where we want to put this. It's going to where we want it. It's on the desktop in Get Great Guitars section 7. It's going to be a PDF. I'm going to rename it, and we're going to call it Sam the Guitar Man. It's going to be a, I'm going to put the sales receipt, and I'm going to put the amount or the date of 01.16.21 and save that. And that's going to be it for the creation and printing of sales receipts.